Can you fully retire and never work again a day in your life after a military career? Hey everyone, and welcome to The Savvy Squaddy. In today's video, I'm going to be showing you how you can use your career in the military to fuel early retirement. For this video, I'll be using the British Army's rank structure and pay scale with a promotion rate of every 4 years and a career length of 22 years, whilst being on supplement rate 1. However, if you're watching this and you're not in the military, everything I show in this video can be applied to your own civilian career as well. So, firstly, how to do it? Well, this method involves investing, but don't let that scare you away. Investing is easier and safer than most think, and there is really nothing to be scared about. If you haven't already, watch my Investing for Squaddies video, as it should hopefully shed some light and help you understand investing more. All you need is an investment ISA, whether that be with your bank or someone else like Vanguard, an income and the discipline to maintain recurring monthly deposits into the ISA. Set up a direct debit for the first of every month so it comes out on payday and you barely even notice it was there. Within your investment ISA, you'll be investing in index funds, which is a lot safer and less risky than if you were to invest in individual companies. An index fund contains many different companies. So, when you buy into an index fund, you own a very small portion of each of these companies. Having many different companies within the fund saves your investment from dropping greatly if some of them underperform, as the other companies will counter it. I currently use Vanguard for my investment ISA and invest at the start of every month into their Life Strategy 100% equity fund. This fund carries more risk than their 20% equity fund, for example. This is because with the 100% equity, my deposits buy me no bonds, only stocks, but with the 20% equity, 80% of my deposits will go towards bonds and 20% towards stocks, and bonds tend to be less risky than stocks. So it's up to you to gauge how risky you want to be. Now we know how to do it, how does it work? It's very simple. The whole process works with the power of compounding. To keep this video short, watch my video Compound Interest for Squaddies, as I go into detail on the power of compounding and explain how it works. The FTSE 100 is an index fund that contains the top 100 companies by market capitalisation on the London Stock Exchange. From 1984 to 2019, with dividends reinvested, it has returned an annual average of 8%. This is also the same for the S&P 500, which is an index fund containing the top 500 US companies. So, I'll use an 8% return per year for the example, but if you want to do this yourself and use a different number, then feel free. I also use a compound interest calculator, which I'll link below to figure out all of the results I need for this example. So, let's begin. Joe joins the army and spends 4 years as a private. His starting gross salary is £20,400. He deposits £100 per month into his investment ISA, where he earns an average of 8% per year. After the 4 years, he has a total of £5,638.90 in his portfolio. Joe then promotes to Lance Corporal, where his starting gross annual salary is £27,326, and with that promotion he continues to do his monthly deposits, but increases it to £200. After 4 years with an 8% return per year, he now has a total of £18,949.46 in his investment ISA. Joe is promoted again, this time to Corporal. His new annual gross salary is now £31,869, and with this new promotion he adds on another £100 to his monthly deposit, making it £300. He continues this for another 4 years with an 8% return per year. At the end, his total portfolio is now worth £42,697.22. He then promotes to Sergeant with a starting gross salary of £35,853 and adds another £100 to his monthly deposits, now paying in £400 per month for 4 years, takes his portfolio to £80,644.69. With his promotion to Staff Sergeant, he is now starting on a gross salary of £40,358, and he increases his monthly deposits again by £100. At the end of the 4 years at 8% per year, after paying £500 per month, his portfolio sits at £137,910.70. Joe only has 2 years left, and he's promoted to Warrant Officer Class 2. His starting gross salary is £43,896, and once again he increases his monthly deposits by £100. At the end of the 2 years, and his career, his portfolio is now worth £176,476.37p. Joe can now leave the army and have an income of nearly £13,000 without having to work another day in his life. This is because if Joe's portfolio continues to get 8% return per year, he is able to live off of the interest his portfolio gains even if he stops paying into it. There are some caveats to this, which I covered towards the end of the video, but none of them are deal breakers. However, Joe decides to extend an extra 2 years but remains a W02, and he continues to pay £600 per month. At the end of these 2 years, his portfolio is now worth £221,459.37p, and the interest it would earn per year at 8% is £16,156.56p. By staying on an extra 2 years, he has raised his potential passive yearly income by over £3,000. Due to this income coming from an investment ISA, Joe doesn't need to pay income or capital gains tax, so all of the interest earned goes straight into his pocket. Now, some of you may be saying that's not enough to live off, and for some people it won't be. But Joe has budgeted his money and tracked his expenses throughout his career and hasn't wasted his money on mindless consumerism. He doesn't live a frugal or minimalistic lifestyle either. He just has good financial literacy and is smart with his money. He knows how much he actually spends per year, and £13,000 is enough even if he didn't stay on an extra 2 years. In order for this to work and for you to achieve an early retirement, you need to actually know how much money you spend every year, and from there work out how much you can invest per month and use a compound interest calculator to see how long it will take for the interest earned to equal your expenses. If it's too long, then either you need to invest more or cut back on what you spend your money on. Also, that whole example was with only Joe's income. Joe got married just as he promoted to Lance Corporal and had a couple of kids. His wife didn't go back to work until he was promoted to Corporal. She then contributed £150 for the rest of Joe's career. With this extra money, at the end of the 22 years, the portfolio is now worth £221,922.77p, with a yearly interest of £16,121.44p. If Joe extended 2 years, then that yearly interest would bump up to £20,310.98p. Joe joined when he was 18. He will now be able to fully retire by 40, living off of a full military pension and his investment ISA. He now has so much more choice with his life without the pressures of having to have a job to earn a paycheck to support his family. He now has time freedom. This is something anyone can do, and it's not too late to start. You can put in more or less than Joe, but the key is to do it, and do it regularly. Even if it won't completely fund your retirement, it's still sure as hell going to help you live a more stress-free retirement. And just because you promote or get a pay rise, it doesn't mean that extra money has to be spent on random that you didn't need and lived without before you got a pay rise. Either use that money to increase your investment deposit or to pay off any debt you have. The quicker that debt is paid off, the less interest you pay on it, and so the more money that stays in your pocket. Now, time for some caveats. Firstly, this is not a get-rich-quick scheme, but I hope that's obvious from the fact it takes years to achieve. However, it will only work if you keep up regular deposits. You have to be consistent with it and be disciplined. Don't become lazy or complacent with it. Secondly, do your research before opening an investment ISA with someone. You will be charged fees on investment ISAs, and you may fall foul to higher fees if you don't shop around. Vanguard's average ongoing cost is 0.2% of your portfolio, and they also have a 0.15% annual account fee. Also, understand this can be risky. Investing in index funds over the long term is quite safe, and historically the market goes up, but past performance is no guarantee of future results. There is still some risk. There is still a chance you could lose your money. So again, do your research and only invest each month what you can afford to lose. Do not let your emotions control your investment decisions. The market will go up and down. The 8% return is an average over a number of decades. This is because some years you may actually see a return of 17%, but then the next year your return could be minus 20%. You need to have a long-term outlook on investing and not be overly worried about short-term fluctuations in the stock market. And yes, anything short of a decade is short-term in my opinion. If you panic sell as the fund is dropping, you could lose a lot of money, especially when the fund eventually returns to where it was and goes beyond. My Vanguard portfolio dropped 36% between February and March last year due to the pandemic. This was because people were allowing their emotions to do the thinking for them, thought it was the end of the world, and were selling their shares, which in turn dropped the price even further, which in turn made more people sell. However, even though I saw quite a drop in my portfolio, I didn't sell any. Instead, I bought more. I used some of my savings to buy more shares on top of my monthly regular deposit. In my eyes, it was on offer, too good of an opportunity not to buy more. And since then, as I record this video, the share price is up 14% from where it was before it dropped, and 57% from the bottom, and I have made quite a healthy profit by using my brain and not allowing emotions to control my investment decisions. Warren Buffett, a famous US investor, once said, "Be fearful when others are greedy, and greedy when others are fearful." And during the pandemic, I made sure I stuck to that. However, once you're in retirement, just be aware that if this retirement pot is your only source of income, and there happens to be a bad year or two, which is likely, then you might not earn the amount of interest you need, and so might have to sell off some of your portfolio to keep you afloat. This is why it's important to have multiple different streams of passive income and to diversify your portfolio, both of which will be talked about in future videos. And lastly, one thing that will definitely affect your portfolio and its gains is inflation. I didn't take inflation into account with Joe's example as I wanted to save it for this part. Essentially, the £16,000 yearly interest that he will earn when he retires will not be able to buy what it can today, as inflation raises the price of things. However, one of the solutions to this is to increase your monthly deposits with inflation. So, every year add around 2% to your monthly deposits, as the government tries to keep inflation at 2% per year. That way, your portfolio should increase in line with inflation. If using the compound interest calculator, there's a section to account for inflation. At the end of the day, it's still better having your money invested than it is in a savings account where the interest rate is lower than that of inflation. So, can you fully retire and never work again a day in your life after a military career? The answer is yes, you can. But you have to put in the work. Believe it or not, there is no get-rich-quick scheme or shortcut to wealth and financial freedom that doesn't involve luck. Hopefully, after watching this video, you can see the potential that putting away a small bit of your paycheck every month can have on your future retirement. You don't have to put in as much as Joe, or you can put in more. It's completely up to you. As I said in the personal finance for Squaddies video, it's your money. Do what the f you want with it. If you want to spend it all and not think about your future, then go ahead. But if you want to take control of your life, to be able to do what you want to do and reclaim 5 days of the week back, then start taking action now. No one's going to do it for you. Let me know down below if you enjoyed this video and if you'd learned something new. Thank you all for watching. If you liked what you just saw, please hit the subscribe button up there, and if you want to see some more videos, click over there. See you soon.